Hey everyone! Today we're breaking down one of the most interesting and honestly, one of the most controversial assets in the market right now. HBAR, the native token of the Hedera Hashgraph network. The price has been hovering around the 0.09 mark, and the market is asking one question. Is the 0.1 a launch pad or a ceiling? Is this a real breakout or a bull trap? Let's go through everything in detail: the technicals, the fundamentals, the institutional players, and the real scenarios. Because nothing here is as simple as it looks at first glance. So, where are we right now? As of April 2026, HBAR is trading in the 0.087 to 0.089 range. That's neutral territory. Not oversold, not overbought. RSI is floating between 37 and 44. MACD is bearish, histogram practically at 0. Bollinger Bands are tight lower band at 0.08, upper at 0.1, midline right at the 0.09, basically where price is sitting right now. Here's the core issue. HBAR has been trying to break through the psychological 0.1 level for several months in a row. Back in January, the token was holding above 0.102, then it started losing structure. That was the first warning sign. In February, 0.1 became resistance again, and buyers couldn't break through cleanly. In March, same story. Now it's April, and we're back at the same barrier. At this point, this isn't just a level. It's a battle for market psychology. Let's be honest about something. If the same level holds price back multiple months in a row, that's significant. The market is telling us something. The question is, what exactly? Let's start with the bearish scenario, because that's the one most retail investors ignore when they're hoping for a rally. MACD on the daily time frame is still negative. The MACD line is hugging the signal line that's basically the market saying, I haven't decided yet. The histogram is near 0, meaning neither bulls nor bears are in control. This is exactly the kind of setup where retail traders pile in expecting a breakout and exactly where bull traps get formed. If HBAR fails to hold 0.087 as support on a daily close, the structure breaks. Next targets to the downside, 0.073, then 0.065. That's not a scare tactic, that's Fibonacci math and volume behavior. Now the bullish scenario, and it's just as real. The W pattern on the daily chart, a double bottom, is technically still intact. This is one of the most reliable reversal patterns in technical analysis. The neckline of that pattern sits above 0.1 to 0.135. If HBAR closes and holds above 0.1035, that's the first technical signal of a trend reversal. Next targets: 0.11, then 0.1109, that's the 61.8% Fibonacci retracement level. Beyond that, 0.132 and 0.165. What does a confirmed breakout look like? 3 things. First, RSI needs to break above 50 and hold. Second, the MACD histogram needs to flip positive. Third, rising volume on the move up. Without all 3 of these confirmations, any move above 0.1 is potentially a trap for anyone who jumped in too late. Now let's talk about something that actually changes the picture: institutional players. Because while retail is debating whether RSI works, institutions are already placing bets. Canary Capital launched the world's first spot HBAR ETF. It trades on NASDAQ under the ticker HBR. As of early April 2026, the fund has attracted $93 million in assets. Think about that number for a second. At a price of 0.087. This isn't random, it's strategic positioning. The SEC and CFTC have classified HBAR as a digital commodity. That's legal protection. It opened the door for institutional capital, and capital is flowing in. When Canary Capital creates an ETF, they're not doing it because they have nothing better to do. They're doing it because they see demand from banks, hedge funds, and pension managers. Yes, 93 million isn't 93 billion. But remember how the Bitcoin ETF started. Modest. Then BlackRock and Fidelity came in, and everything changed. The precedent is set. And that's exactly why serious analysts are looking at HBAR as an asset that hasn't yet priced in what's already happening in the real world. Now, here's where it gets really important, and I want you to actually absorb this. Because most people think HBAR is just another token with good marketing. It's not. Hedera Hashgraph is not a blockchain in the traditional sense. It's a directed acyclic graph, or DAG. Technically, this means the network processes over 0 transactions per second with a fee of around 0.0001 per transaction. For comparison, Ethereum costs hundreds of times more. Solana is fast but unstable. Bitcoin isn't even in the same conversation when it comes to throughput. But speed isn't the main point. The main point is who runs this network. The Hedera Governing Council is a board of 39 of the world's largest corporations. Google, IBM, FedEx, Boeing, LG Electronics, Standard Bank, Deutsche Telekom. These are the companies making decisions about how the network develops. This isn't some anonymous developer in a hoodie who deployed a smart contract in his garage. This is Fortune 500. And they're not just interested, they're actively using the network. FedEx uses Hedera for supply chain tracking. Hyundai and Kia use it for carbon footprint monitoring. Repsol uses it for digital identity verification. Verra, the world's leading carbon credit standard body, is tokenizing carbon markets through the Hedera Guardian framework. These are real, working products, not prototypes, not white papers. On top of that, Hedera has received ISO IEC 27001 certification, the international standard for information security. That's exactly the kind of certification you need to work with banks and governments. Coincidence? No. It's part of a deliberate strategy to capture the enterprise market. All right, now it's time to talk about what many HBAR maximalists prefer to avoid. Tokenomics. Total HBAR supply. 50 billion tokens. All pre-minted at the network launch in 2018. As of March 2026, approximately 43 billion are in circulation, so the majority of tokens are already in the market. But the remaining 7 billion, that's the Hedera Treasury, ecosystem fund, incentives, and so on. The problem isn't just the total supply. The problem is the distribution structure. 32% of the initial supply is the pre-minted treasury, meaning Hedera itself controls a massive chunk of the circulating supply. Another 14% belongs to founders and early executives. 8% goes to Swirlds Inc. That means a significant portion of tokens is in the hands of insiders, with the potential to create consistent sell pressure. Yes, there's a managed vesting schedule, but until institutional demand exceeds, that supply price will always face a ceiling from ongoing selling. This is exactly why HBAR can't cleanly break .0.1, despite 93 million in an ETF and real corporate usage. This isn't fatal. It's just a factor you need to factor into your calculations. The narrative matters, but the math matters more. Now, let's map out 3 real scenarios. Not wishful thinking, concrete technical and fundamental setups. Scenario 1. Bullish breakout. HBAR closes above 0.1035 on rising volume. RSI breaks 50. MACD turns positive. In this case, next targets are 0.11, 0.1109, 0.13. With sustained buying and a return of market risk appetite, that 0.165 by mid-2026 is realistic. Potential catalysts. HederaCon 2026. New announcements from corporate partners. Growth in Canary Capital ETF assets. Under management. Positive macro backdrop. Scenario 2. Prolonged consolidation. Right now, this is the most likely base case. HBAR stays in the 0.087 to 0.1 range for several more weeks. The market is waiting for a catalyst. Volumes are low. Neither bulls nor bears are dominant. This is boring, but it's also an accumulation phase. Smart money moves in quietly. Scenario 3. Bearish breakdown. If HBAR loses 0.087 on a daily close, the W pattern structure breaks. Next support, 0.073. Under increased selling pressure, 0.065. Triggers: broad crypto market correction, macro deterioration like rising rates or trade war escalation, weak on-chain network data, disappointing news from Hedera. Let's come back to the topic of institutional interest because there are some important nuances here. 93 million in an ETF sounds loud, but let's put it in context. The Bitcoin ETF attracted billions in its first months. The Ethereum ETF similar. HBAR with 93 million isn't in that league yet. But the number isn't what matters, the trend is. If the ETF continues growing, if major asset managers add HBAR exposure that changes the ownership structure, less retail equals less panic equals more mature price movements. There's also information suggesting Hedera is exploring integration with CBDC projects' central bank digital currencies. That's a multi-trillion-dollar market. If even one major government selects Hedera as infrastructure for its digital currency, that changes the game entirely. Right now, this is a forecast, not a confirmed fact. But even a rumor of that kind can move markets. Binance Research puts HBAR at 0.218 by end of 2026. That's roughly 150% from current levels. Changeli and several other analytics platforms point to similar figures. Yes, price predictions aren't a recipe. But when multiple independent analysts converge on the same horizon, that's data worth thinking about. Here's a paradox worth sitting with. Hedera is one of the most technically advanced projects in all of crypto. Real corporate clients, real product, Fortune 500 governance, an ETF on NASDAQ, and yet the price is 0.09. Why? First, the narrative. Hedera is boring. It doesn't have the hype of DeFi. No meme coins, no NFT boom, no Elon Musk tweets. It's corporate infrastructure. And retail doesn't pay for boring things, retail pays for dreams. Second time. The corporate sales cycle takes years, not months. Pilot programs, tenders, legal department sign-offs, integration with legacy systems. By the time that all happens, the retail investor has already lost patience and moved into the next hot token. Third, tokenomics pressure. Constant selling from the treasury and insiders limits upside even when the news is good. But here's what's critical to understand. None of this means HBAR won't rise. It means the rise will be slow, organic, driven by real data, not tweets and hype. For some investors, that's a positive. For others, it's a deal breaker. Depends entirely on your time horizon. Let's lock in the specific levels worth watching. Key supports. 0.087. This is the critical zone where buyers need to defend market structure. 0.08. Lower Bollinger Band, the hard floor. 0.073 next zone of structure breaks. Key resistances. 0.1 psychological barrier. Upper Bollinger Band, 50-day SMA. 0.1035. 50% Fibonacci retracement. The technical line that confirms a bullish reversal on a clean close. 0.1109, 61.8% fib, the next major target. 0.132 and 0.165 medium-term targets in a sustained bull scenario. What to watch first? A daily candle close above 0.1 with volume 1.5 to 2 times above the 20-day average. RSI above 50. A positive MACD crossover. These are the 3 signs of a real breakout, not a false one. We also can't analyze HBAR in a vacuum. The broader crypto market in April 2026 is still digesting volatility. Macro factors are pressing. Trade wars, uncertainty around interest rates, general risk-off sentiment. Bitcoin is holding around 71, 0 to 75. 0 not a bear market, but not euphoria either. When Bitcoin is uncertain, altcoins suffer. HBAR is no exception here. If BTC pushes above 80, 0 to 85, 0, that opens risk appetite and money flows into alts. HBAR in that scenario would be among the first candidates for repricing precisely because of the fundamentals. If Bitcoin pulls back, keep 0.073 on HBAR in mind as a realistic downside scenario. Don't panic. Use it as an opportunity. So, what's the final verdict? Is this a breakout or a bull trap? The honest answer: neither one yet. HBAR is in a decision zone. Technical signals are neutral. Fundamentals are among the best in the industry. Institutions have entered, but sellers haven't surrendered. 0.1 is not just a price, it's a test. A test of whether the market has matured enough to finally price in what Hedera has been building for years. If you're looking at HBAR on a 6 to 12 month horizon, the fundamentals are on your side. Corporate usage is real. The ETF exists. The governing council isn't marketing. It's a real governance structure that institutional capital requires. If you're looking at HBAR with a buy today, sell next week mindset, be careful. 0.1 is hard resistance. Without volume confirmation of a breakout, this level can become a ceiling again. The smart approach: wait for confirmation. Watch for a daily close above 0.1035. Check the volumes, monitor what's happening with the Canary Capital ETF. And don't bet your whole portfolio on a single move. HBAR isn't a lottery ticket. It's an infrastructure asset in the middle of a repricing process. Sometimes, the most boring assets make the most interesting moves when the market finally notices what smart money saw long ago. If you found this breakdown useful, like the video and subscribe. We'll be watching as the story unfolds. And remember, in crypto, it's not the people who guess who win, it's the people who understand. This is not financial advice. Always do your own research before making any investment decisions.